hey guys, if you thought the collapse of Silicon Valley Bank and Silvergate Bank and all these other banks were huge in the US, we ain't seen nothing yet. Now, this is not a collapse necessarily, but it is Credit Suisse, and they just got bought out by UBS. Now, to show you how crazy whatever this maneuver is, this is a stock chart. It's just dropped by 60%, right? It reflects the price that UBS paid for Credit Suisse, which is 60% lower than the share price that it was prior to the weekend. They offered a bid that was 60% lower and it got accepted, right? That's the new stock price right down there. That's the little mark down there. Massive drop, right? The real question is, why would or did Credit Suisse sell? What the heck is happening with Credit Suisse? Now, Credit Suisse is a globally systemic bank. What was so bad that the Swiss government asked UBS, the other major Swiss bank, to buy out Credit Suisse, right, on pennies on the dollar. And not only that, they forced the shareholders, they forced this maneuver to bypass shareholders. So shareholders of UBS do not actually get to vote on this motion. The government forced a private company, UBS, to buy Credit Suisse. And the bribe that they put was, any losses, we will account for $9 billion. As well as that, you get an extra $100 billion of credit lines in case anything goes wrong and you need to borrow some money. So this is a really sort of forceful way of doing a bailout of a multi-billion dollar globally systemic bank without actually saying it, right? This is almost a 2008 moment. We're bailing out someone like Lehman Brothers, right? And this is what we just did. And they pulled all the stops to make it look like it was a legitimate private buyout. But it wasn't. It was the biggest bailout since 2008. This is absolutely huge. Now, I want to highlight also how this is only one piece of news. And I truly believe, if we haven't realized it yet, that we are in the midst of a financial or banking crisis. I mean, I got this article. I mean, it's just over the weekend. Warren Buffett, right? He's in talks with the Biden team to save regional banks, right? To buy up banks and shore up their balance sheets. Talking to the Biden team themselves. The last time he did something like this was, again, in 2008. But we're not in 2008, are we? Or are we? Well, here's another thing that we didn't do for a while. Last time we did it was basically in 2008. And that is, the Federal Reserve and other central banks have created swap lines. So other central banks like Bank of Japan and the ECB, the European Central Bank, they're able to access US dollars and borrow money from the Federal Reserve to sort out whatever loans are necessary, especially loans that are denominated in US dollars. This is the other central banks getting a direct line to Federal Reserve to get US dollar funds to plug whatever is wrong with their banking system on the fly. And we haven't done this practically. Well, we did it in 2020 and also we did it in 2007, 2008. So to all the people, especially Janet Yellen, who just said there is no, the banking system is completely fine, it's safe. Why are we doing these measures? I think in my estimation, we are actually in a full-blown banking crisis. They're not telling us. They are just not telling us. And in my previous video, I talked about how they had another 300 billion added onto the balance sheet, new loans, new liquidity into the US economy, into the US banking system. This is what the Federal Reserve did. And then we took about 8 months to wind down, 600 billion. And now they've just injected back in. So all our work done to slow the economy and reduce inflation, we've undone half of that in 1 week. And now we've got these swap lines. We've got Warren Buffett being asked to save the day. We have the Swiss government forcing a private company to bypass any shareholder votes to buy another bank that has assets so bad that they're willing to take a bid. Let me just go back to the car. They're willing to take a bid 60%, right? 60% below the market price, right? So this company, Credit Suisse, this bank was essentially going to go bankrupt. This bank has been around for 170 years, and that is what we're looking at, right? Now I'm gonna keep this video short, but here's salt to the wounds, additional salt to wounds, injury. What is it? Rubbing insult to injury. So there were $17 billion worth of, or here in the article it says risky loans, but it's AT loans, which is additional tier 1 loans, AT1 loan. And there's a lot of banks that write this. So this is like giving a loan to a bank, but if anything goes wrong, you get equity, you get shares in the bank. Now, what happened with Credit Suisse was that the loans effectively went to zero. So with these loans, they're absolutely worthless. And even when they're triggered to become equity, that is stock, the stock had this massive haircut that we saw today. So even that was no protection for these bonds. And not only that, usually when a company goes bankrupt, bondholders get the money, as in the people that loan money to that share that company, they get the money first before the shareholders, any money that's remaining. In this case, the people that bought these AT1 shares did not get that. So they violated that rule too. And we've got more and more repercussions. So Europe has a nearly $300 billion AT1, additional tier 1 loan market, right? That just had a massive wipeout of 16 billion Swiss francs, which was about $17.3 billion wipeout, right? And there are other banks in Asia with these AT1 loans, and that forms part of their balance sheet. And guess what? They're getting hammered too. HSBC, well, not as much as it was early in the day. There was a massive recovery, and let me just sort this one out and show you how big this drop was. At the lowest point, it dropped 5% today. 5%. We're seeing multiple. Well, there's a bit of recovery. Multiple banks in Asia dropping on this news. So Credit Suisse got bailed out, but guess what? Other banks are getting hammered just the same, are still dropping. So something is up. There's a little bit of recovery, but massive drops in the market open. Deutschebank is recovering to only minus 3% down, but I will get the measurement tool. Down 10% today, right? I thought I missed the point, but no, I didn't. Commerzbank was down 8% today, right? Even though Credit Suisse got bailed out and everything's supposed to be hunky-dory, and we have patched this financial crisis with a massive multi-billion-dollar band-aid courtesy of the Swiss government. But guess what? The market is saying that there's still more banking problems in store because the banks are just not recovered even from a massive bailout. So what's in store? Do we have more bailouts, more collapses coming? This is far faster than probably anyone would have predicted, apart from perhaps Peter Schiff, but these things happen quick and fast. Anyway, if you like today's video, the update, please hit the like button, share with your friends, and if you haven't, please hit the subscribe button to get more updates on Abe's Express. I'll see you guys in the next ones. Ciao, bye.